It's been a year of hot and cold moves from foreign investors in India's stock market. In 2025, so far, they have pulled out more than 1.1 trillion rupees. This even as they extol the virtues of the country's long-term growth story. So, what's behind the exits? Well, expensive valuations, weaker corporate earnings, a falling rupee, and of course, the latest international curveball: Donald Trump's 50% tariffs on Indian goods. And while domestic investors now hold a record 17.8% of the market, overtaking FIIs for the first time, the big question is, can local money really keep the market steady when global money walks away? Listen on as I talk about all this with ET's markets editor Nishanth Vasudevan in today's episode. It's Tuesday, the 12th of August. I'm Anirban Chowdhury. This is the Morning Brief. Hi Nishanth, very warm welcome to the Morning Brief. Always good to have you with us.
Thanks, Anirban. Thanks for having me on the show.
Okay. So Nishanth, what's the latest on foreign institutional activity in the Indian stock market?
Anirban, now it's been quite an interesting year. They have been in the hot and cold mode this year. Actually, if you look at the first quarter between Jan and March, they were sellers. In April and June, they bought. And now July and August, in the past 2 months, they have started selling again. But net, if you look at the total impact of all the activity, they have actually sold more than 1.1 lakh crore in calendar year 25 so far. Last year in 2024, they ended up being net buyers to the tune of around 430 crore. And in 2023, they were buyers to the tune of around 1.7 lakh crore. Now, the FII activity this year in 2025 cannot be seen in isolation because the real selling by FIIs actually started in September, end week of September, October last year.
So there seems to be some sort of delta between what they're saying publicly, which is that, Indian economy has great prospects, etc., and what they're actually doing in the markets. Why is it that they are pulling out money?
Yeah, I mean, that's a very valid point. See, if you talk to fund managers, they all are very bullish on India from a very long-term perspective because of the kind of economic vibrancy, the demographics, etc. But when it comes to investments, there are several factors that have impacted Indian markets, at least in the short term. One is, of course, the Indian market share valuations are at a premium, not just to its long-term averages, to its 10-year average, but it's also at a premium to its regional peers like China and all other markets. Now, to top it, you also have a corporate earnings slowdown. Okay, the rupee has been weakening. No foreign fund manager, no foreign fund would like to hold a portfolio in a declining currency.
Sure.
So that is one thing which has been determining their decisions while investing in India. Now, another factor which is like kind of increasing their uncertainty about India is the tariff factor. Okay, because nobody really expected Donald Trump to impose a 50% tariff on India as such. The question that is probably that you have expensive valuations, you have an earnings slowdown, and on top of that you have this tariff thing which is kind of suddenly popped up. So they're just they've taken a step back. But that does not mean that they are bearish on India from a long-term perspective. As of now, they don't want to take any big calls on India. That is where we are standing.
Right. Just taking you back to the overvaluation bit, Nishant. I mean, with my limited understanding, I've always heard about Indian markets being really expensively valued. So, is there something that has changed now?
Yeah, that's actually a very valid question. But again, that is where the context comes into play. India was expensively valued, but the foreigners didn't mind that expensive valuations because the earnings growth as such, they were quite robust. They were among the best in the region, and in fact one of the best in the world. One of the most widely followed valuation measure in the world is price to earnings ratio, which is like the price divided by earnings. Okay, now just imagine that the price remains the same, but earnings, they start kind of coming down.
Right.
So then the price shoots to the roof. Then the entire valuation, the ratio as such, starts looking elevated. That is what is happening at the moment. And also, please understand that when a foreign investor looks at India, it is not looking at India in isolation. It looks at multiple markets. So when you have an expensive India where the earnings is slowing down and there is generally a slowdown in economic activity, and when you have a cheaper China, they would probably start looking at, okay, fine, let's give China also a chance, because anyway, India is expensive and it is slowing. So these are the kind of things that are playing on the minds of foreign fund managers at the moment.
Understood. Okay, so our domestic flows, which are pretty robust, are they a cushion for the markets?
Yeah, actually, so that is another debate which people have been, especially the local optimists, they have been having of late, is that do foreign flows really matter? Just to give a little bit of perspective over there, the share of foreign holdings, foreign portfolio holdings in the Indian market has declined to a 13-year low of around 17.04% in the June quarter. Okay. On the other hand, domestic institutional investors' share in the Indian markets, it's at another all-time high. It had hit an all-time high in the previous quarter. Now it has hit another all-time high of 17.8%. Okay. Now that is very significant because the share of domestic holdings in the Indian market overtook FIIs in the March quarter. That has never happened in the past. So in a way, people are justified in saying that the impact of foreign holdings is having a lesser impact on the Indian markets because of the kind of money, that domestic money that is flowing into the market. But is that a good reason alone to kind of ignore foreign flows? I don't think so.
So, Nishant, is the lack of appetite of foreign investors on Indian stocks really a reason to worry?
But no, I would put it this way, that it is less of a worry than earlier. But the foreign flows as such, it is a more accurate indicator of the health of the market's earnings and the economy as such. If you compare that with the domestic flows, especially from mutual funds, the mutual fund flows as such, they have been quite mechanical in a way. If you look at SIPs, people are not really looking at valuations or earnings growth or anything of that sort. They're just mechanically putting money into the market. So it is not really saying anything much about the market as such, but the impact of that has been great. I mean, it has kind of stabilized the market a lot. So coming back to the FPI flows as such, it still has a fair bit of power to move the market. There's no doubt about it. If you look at the kind of flows, and if you kind of compare that with the market movement as such, between Jan and March, when there were FII outflows, the market was actually weakening. And after that, between April and June, when there was a little bit of inflows into the market actually picked up. So I would look at it this way, that foreign flows are the drivers of the market, while the DII money is more of the stabilizer of the market.
Yeah, that's very well put. How do you see this going ahead? Because some of the problems will remain, right? Because one doesn't know if the Trump circus or whatever is happening will end after the elections in November. You said that it's a group that investors look at. So and Trump is targeting BRICS, not just India. You've seen bad news from Brazil, etc. Also, now you spoke about the growing delta between earnings and prices. Do you see overseas fund managers becoming bullish on India in the near or medium term future again?
That is the trickiest question, because the thing is that people don't really know. The biggest issues that India is facing is there is a bit of an overall slowdown. But it also depends on who you are talking about, because FIIs as such, they're not a big group which kind of comes into India and exits at the same time. So within FIIs also there are multiple categories. The hot money, which is like the hedge fund money, the ETFs, they tend to get bullish or bearish in shorter durations. For instance, let's say that the market falls maybe 10 or 12%. You will see a lot of this hot money coming in, taking advantage of these blips, the upsides and the downsides. The value conscious foreign fund managers, overseas global investors, they think very differently. For them, valuations are a big concern. Okay, so till the time India's valuations don't really kind of moderate significantly, they're not going to come back in a rush. The other categories, of course, the growth-oriented fund managers have also been a little disillusioned by the fall in corporate earnings. So let's say that the corporate earnings start picking up, but they will also start showing a little bit of interest in the markets. So there are several moving elements to it. It is very difficult to say when they'll come back, but these are some of the triggers that probably investors could watch out for to see whether FIIs are coming back or not.
Right. Thank you so much, Nishanth, for joining us on the Morning Brief.
Absolutely, my pleasure.
So, from what Nishanth said, India's market engine is running on strong domestic fuel, but the steering wheel is still in foreign hands. FIIs might come roaring back if valuations cool, earnings bounce, or political clouds clear. Until then, the road ahead will be a careful dance between global drivers and homegrown stabilizers. That's it for today. This episode was produced by me and Vinay Joshi, sound designed by Amrit Reggie. Listen to the Morning Brief every Tuesday, Thursday, and Friday, wherever you get your podcasts. Also, don't miss our new show, Corner Office Conversation, where the brightest minds of the economic times talk to the most interesting business leaders from India and the world. Episodes drop every alternate Monday on your favorite listening platform. Have a good rest of the week.